Have you ever wondered why every major stock market crash in American history has created more millionaires than it destroyed? People imagine chaos. Fear, panic, Wall Street traders shouting as red numbers flash across their screens, families losing homes, retirement accounts evaporating, and savings turning to dust. But what if I told you that behind every financial collapse lies a secret pattern, one that quietly transfers wealth from the unprepared to the prepared? Because here's the truth no one likes to talk about. Crashes don't destroy wealth, they transfer it. They move money from those who panic to those who plan, from those who follow emotion to those who understand the system. And if history is right, what's coming in 2026 might not just be another correction. It could be the biggest wealth transfer in modern history. After the Great Depression of 1929, when it seemed like the American economy had been reduced to ashes, a handful of investors quietly bought quality stocks and real estate for pennies. When the markets recovered, their fortunes multiplied beyond imagination. After the dot-com crash in 2000, patient investors who bought strong technology caught their wealth grow tenfold. Amazon fell from over $100 to just $6, and those who believed in its fundamentals became millionaires within a decade. Then came 2008. The housing market imploded, Wall Street burned, and panic gripped the nation. But those who understood the cycle bought at the bottom, acquiring homes, stocks, and businesses at record lows. What followed was the greatest bull market in American history. And now, the same warning signs are flashing again. The Shiller PE ratio, which measures how expensive stocks are relative to actual earnings, is sitting at its second highest level in recorded history. The only time it was higher was right before the dot-com crash that wiped out trillions. Household debt is at an all-time high. Corporate borrowing has ballooned to unsustainable levels. Government spending has gone beyond what even the Federal Reserve can manage. Every metric that matters is screaming that we're approaching a breaking point, just like 1929, 2000, and 2008. But here's what most people miss. These moments of chaos are also the moments of creation. They reset the system and open the door for those who know how to play the long game. If you find this kind of financial insight valuable, take a second to subscribe to Financial Primer, because what comes next might just be the playbook for surviving and thriving through the 2026 crash. You see, the American financial system moves in predictable cycles, roughly every 20 years. Each generation experiences the same rhythm: easy credit, asset bubbles, and a period where everything looks fine right before it collapses. We saw it in the Roaring '20s, the inflationary '70s, the early 2000s, and again in 2008. Now, as we approach 2026, the indicators are lining up in almost perfect formation. Consumer confidence is slipping. Manufacturing is contracting. Credit card defaults are rising. Commercial real estate is cracking under pressure. The signs aren't random. They're the tremors before the earthquake. And while the media tells you the economy is strong, unemployment is low, and there's nothing to fear, remember, they said the same thing in 2007, and before that in 1999. Meanwhile, the smart money, the institutional investors, hedge funds, and elite families are quietly preparing. Warren Buffett's Berkshire Hathaway is sitting on over $300 billion in cash, the most in its history. Hedge funds are rotating into gold, silver, and commodities. Central banks are stockpiling physical assets. They're not panicking. They're positioning because they know what's coming, the end of one financial cycle and the beginning of another. The question is, will you be on the right side of history when the system resets? The difference between those who suffer and those who succeed during a crash isn't luck, it's preparation. In 2008, while millions lost their jobs and homes, a small group of disciplined investors quietly bought assets for pennies. They understood that fear was temporary, but value was permanent. History has repeated that same lesson in every downturn. During the Great Depression, John D. Rockefeller said, "Fortunes are made when blood is running in the streets." It wasn't about greed. It was about understanding the rhythm of the financial world. Crashes always reveal one simple truth: money doesn't disappear. It changes hands. And if you know how to position yourself before the panic, you can be on the receiving end of that transfer. Most people are trained to think like consumers, not investors. They buy when prices are high, when everyone's optimistic. They sell when fear takes over, when prices crash. That's how wealth is lost. Not in the crash, but in the emotion. Smart investors do the opposite. They save when everyone else spends. They buy when others are afraid. They hold when others panic. Because when the dust settles, ownership is what creates wealth, not speculation. Corporate debt levels are the highest in human history. Government deficits are soaring. Consumer debt is maxed out. The Federal Reserve has printed over $8 trillion since 2008. That's not sustainable. It's mathematical reality. Eventually, the system must reset. And when it does, real assets will survive. Gold, real estate, and companies that produce things the world truly needs. These are the foundations of wealth that endure every crash. Here's the irony. Every time America goes through a crisis, it emerges wealthier for those who prepared. It's not about predicting the crash. It's about positioning before it happens. The 2026 crash isn't a punishment. It's an opportunity, a massive, once-in-a-generation chance to buy the future at a discount. The signs are already all around us. Inflation, once thought temporary, has become persistent. Grocery prices keep climbing, housing remains unaffordable, and wages can't keep up. The cost of living crisis is not random. It's the symptom of a monetary system stretched to its limits. The Federal Reserve is trapped. If it raises interest rates, the economy slows, unemployment rises, and debt becomes unpayable. If it cuts rates, inflation returns with full force. Either way, the result is instability, the perfect breeding ground for a financial reset. That's where the opportunity hides. Because chaos always reveals value. Think of 1929 again. Stocks crashed nearly 90%, but those who bought when prices hit rock bottom saw generational wealth in the recovery. The same was true in 2009. The people who invested in real estate when everyone else was afraid became millionaires within a decade. It's always the same pattern: panic, collapse, opportunity, recovery. The question is whether you can stay calm enough to see through the noise. We live in an era of digital panic. Social media amplifies every piece of bad news, every rumor, every fear. But real wealth is built quietly, in moments when the crowd is too distracted to notice. As 2026 approaches, there will be a moment, a brief window, where everything looks broken. Stock markets will tumble, banks might tighten lending, layoffs will rise, and the headlines will scream recession. That's when you'll have to decide whether you'll see disaster or opportunity. Because after every crash comes a rebuilding, and that rebuilding is where wealth is born. The elites understand this perfectly. They don't fight the cycle, they ride it. When the Federal Reserve prints money, they use it to buy assets. When the government borrows, they buy the debt and earn interest. When the market crashes, they buy the remains at a discount. It's not manipulation, it's mastery of the system. You can do the same, but it requires one shift. Stop thinking like a consumer and start thinking like an owner. When prices crash, most people panic. The wise prepare to buy. When inflation eats away at savings, most people complain. The wise invest in assets that rise with inflation: commodities, gold, land, businesses. When debt spirals, most people suffer. The wise use debt as leverage to acquire things that produce income. That's how wealth transfers. Now think about the 2026 scenario. Imagine inflation rising again, interest rates unstable, and the stock market dropping sharply. Imagine real estate prices correcting by 30 or 40%. It sounds terrifying, but that's the point. In those moments of fear, the next generation of wealthy Americans will make their moves. Every economic collapse in history has been followed by the greatest opportunities for those who were prepared, those who held cash, had patience, and understood value. You don't have to be a billionaire. You just have to understand timing. The United States has gone through panic after panic, from the Great Depression to the oil crisis, the dot-com bust, the housing crash, the COVID-19 collapse. And yet, every single time, the cycle rebirths wealth for those who understand it. The system rewards patience and punishes panic. And when the next market crash hits, whether in 2026 or slightly beyond, those same laws of finance will apply. As the markets fall, as fear grips Wall Street, as talking heads debate whether this is the end of the American economy, remember one thing: behind every panic lies an opportunity waiting to be seized. And maybe, just maybe, this time, it could be yours. If you found this video insightful, make sure to subscribe to Financial Primer, where we turn financial chaos into opportunity, because the greatest wealth is built not in comfort, but in crisis.